Dirty dealings, corporate battles, consumer woes. This is Evening 5. Bumi Armada is exploring a merger with MISC's offshore business that could create an energy powerhouse with combined assets worth over 20 billion ringgit. Under the Memorandum of Understanding signed, the parties will have 9 months to conduct due diligence and sign a definitive agreement, the firm said in separate exchange filings. The filing said the merged entity is expected to remain listed on the local stock exchange. The proposed merger is aimed at establishing a Malaysian-based sector-focused entity which leverages the combined talent pool, project development and engineering capability and know-how of both MISC's offshore business and Bumi Armada's. For MISC, it will only involve its offshore business that owns, leases, operates and maintains offshore floating production, storage and offloading terminals. MISC was previously considering a stake in Bumi Armada, The Edge reported in July. If the merger goes through, the combined businesses will have the scale, resources and financial capacity to compete in the growing and capital-intensive offshore floating production segment. At today's closing, shares in Bumi Armada settled up 1% to 50 sen, valuing it at 2.96 billion ringgit. MISC shares closed 0.1% lower at 7 ringgit 95 for a market capitalization of 35.49 billion ringgit. MISC said its net profit fell in the third quarter of FY 2024, dragged by lower charter rates for its natural gas carriers and higher vessel operating costs, as it flagged a tough outlook for its key business. Net profit stood at 338.9 million ringgit, down 21% year-on-year, while top line was down 12% to 2.96 billion ringgit due to lower billings in its offshore construction business. The shipping firm flagged that the outlook for LNG shipping spot rates moving into the fourth quarter and beyond remains softer, driven by a high number of vessel deliveries, limited additional liquefaction capacity and moderate anticipated demand in Europe. Still, the company, which owns one of the world's largest fleet of LNG carriers, declared a dividend of 8 cents per share compared to the 7 cents it previously announced in the third quarter of FY 2023. In a landmark decision, the KL High Court ruled that developers who deliver vacant possession of a property without allowing the owners to occupy it is against public policy and goes against the very purpose of the vacant possession. Judge Dato Ahmad Shahriz Saleh noted today that between developers and purchasers, developers have an unequal advantage in bargaining power. He said the delivery of vacant possession while denying the purchaser access to their units contravenes public interest, even if the sale and purchase agreement provides for such a move. The judge also said that developers would no longer be able to rely on such provisions to avoid having to pay liquidated ascertained damages for late delivery of properties to purchasers. His decision favours the appellants, individual purchasers of a commercial property from developer Alpine Return. The two buyers were given vacant possession on July 22, 2018, but were not granted access to their unit. They then hauled the developer to the courts. The judge awarded the buyers 309,225 ringgit and 61 sen with interest as part of liquidated ascertained damages. Finance Minister to Dato Sri Amir Hamzah Azizan said 7.063 billion ringgit will be set aside as capital injection to finance the financial commitments of the companies under the Minister of Finance Incorporated or MOF Inc. A large part of the capital injection will go towards principal payments and debt coupons of companies that finance infrastructure and national development projects. These include Dana Infra, with a principal payment of 3.4 billion ringgit to finance the LRT, MRT and Pan-Borneo Expressway Sarawak projects, and a principal infrastructure payment of 2.3 billion ringgit for Sukuk to finance the LRT3 and capital expenditure. Also, Jambatan Kedua's principal sum of 1 billion ringgit, which financed the second Penang Bridge project, and Ocean Sunshine, which has taken over the project to complete littoral combat ships for the Navy. Speaking in Parliament, Amir also said that following the restructuring of Malaysia Airports Holdings, the government has agreed to take over the Sepang International Circuit, with payments made in installments over 8 years from 2023 to 2030. The payments will total 46 million ringgit per year. Hazurin Harun, the Chief Executive Officer of Encorp, was charged in the Shah Alam Sessions Court with 2 counts of criminal breach of trust or CBT involving 1.05 million ringgit last year, Bernama reports. Hazurin pleaded not guilty after the charges were read to him before Judge Datuk Muhammad Nasir Nordin. In the first charge, Hazurin is accused of committing CBT by making a payment of 350,000 ringgit via an Encorp cheque to LMC Mining for the delivery of 20,000 metric tons of kaolin mineral from a mining site in Perak, although the payment was supposed to be for the delivery of silica quartz. He is also accused of committing CBT by transferring 700,000 ringgit online to the same company's bank account for a shipment from Lumut Port Perak to Nantong, China, and for the rental of a vessel to transport silica sand from the same mining site. Again, the payment was initially intended for silica quartz. The charges were framed under Section 409 of the Penal Code, which carries a jail sentence of no more than 2 years, caning and a fine. The court imposed a bail of 50,000 ringgit and directed Hazurin to report to the MACC office and surrender his passport to the court. The next case mention is set for January 7th next year.